Hello, ladies and gentlemen. Today's session we are going to start about the bank reconciliation. Stay in touch for Apatic TV and remember to subscribe if you tune in for the first time. So raters looking for everything about bank reconciliation. When it comes for bank reconciliation, it is somehow complicated for many others. So here, I'm here to give you uh, the meanings and the different knowledge about this course. So, what do you understand with the bank reconciliation? So, let us look for introduction. In modern business world, uh, the major parts of the business transaction is sorted by check for the purpose of business transaction through check. Every businessman maintains a current account with the banks. He keeps money in his accounts and deposits check and so on. Uh, they received from the customer and draws the check in favor of his creditors for for making the payments. You understand? So the bank is there to give you a check and receive the check, and you as a customer, you are there to give a payment to the company. So that's why uh, as a bank, it's received that check, you grant them, and also the bank is there to credit the bank account. So the current account facilitates a business transaction in a small uh, in a small ways than a cash. For instance, no substantial cash is to be kept in a business. Payments of the check are themselves records of the payments made. The payee is also relieved of the risk of the carrying cash. When a businessman opens a current account in a bank, the bank issue him a checkbook and a passbook. At the same time, the businessman also keeps in records relating to the bank transaction, either through the bank columns of the cash book or through the separate bank accounts in the books of accounts. When the cash is deposited or a check is deposited in the bank, uh, when it is deposited in the bank account is debited in the cash book. But when the businessman withdraw cash from the bank, the same account is credited. Do you understand? Similarly, when a cash is deposited into the bank, it increases the reliability of the bank, and the bank gives a credit to the account of the clients in the passbook. The bank maintains the businessman as the accounts in its ledger, and it copy its records in the passbook and give to the customer. In other words, all entries appearing in the debit side of the bank column of the cash book will be appearing in the credit side of the businessman's account in the ledger of the bank. Conversely, all the entries appearing in the credit side of the bank columns of the cash book will be appearing in the debit side of the businessman accounts in the ledgers of the bank. Sometimes it's happened that the balance of the bank column of the cash book does not show the same balance as that shown by the passbook. Both their balances may be correct, yet may show the difference. In other, in order to reconcile the balances of bank column of the cash book with that of the passbook, this statement is prepared. The statement uh, The statement that is prepared for reconciling the balances of the cash book and the passbook is called the bank reconciliation statement. Do you understand, my friend? So, runners, a bank reconciliation statement is a statement which contains a complete and a satisfactory explanation of the difference in the balances as per cash book and as per uh, as per passbook. So, bank reconciliation is a periodical statement prepared by a trader or particular dates with the object of considering the two balances showed by cash book and the passbook and locating the causes which are responsible for disagree of the two balances on a particular date. My friend, try to understand this more clearly. So, as I have continued toward this, what we are looking is bank reconciliation. The cause of bank reconciliation, it is the difference which is shown between the bank bank or passbook, and also the cash book. So, when you want to collect that errors that are causing the difference between the cash book and the bank statements, you are going to prepare the bank reconciliation. My friend, try to understand this. You are going to get the skills, and also you will pass our exam and also assignments if you have it. So, and also the job of exam for the position of accountant and position of cashier and also the position of finance, they always ask about the bank reconciliation. So remember this, if you are tuning for the first time my video, try to subscribe, share, and also comment. Also, you can ask me in a comment below. I can give you the answer for the question you have. So let us proceed about that about this uh, about this bank reconciliation. So as I continue to say this, what we are looking is the difference between the bank statement and the cash book. So here they are features or characteristics of a bank reconciliation statements. From the above, all the following features of the statement emerge. Here, the A characteristics, it is a mere statement, not an account. Here, this is a periodic statement. That is a characteristics of bank reconciliation. The third, it's prepared on a particular day, or this statement is valid for the day it's prepared. That means if you prepared for today, that is going to be valid for today. Tomorrow will be another different. So that's why it's require daily preparing the bank reconciliation. The preparation of a bank reconciliation statement, it is not a part of a double entry bookkeeping. Do you understand? Another characteristics, the causes which are responsible for disagreement of the two balances can easily be found out. For bank reconciliation, it is easier to get the cause of that disagreement. And let's proceed about the cause, reasons for difference in two balances. So when it comes for the causes, the relationship between customer and banker is that of the creditors and debtor. So if the bank column of the cash book shows a difference of the debit balance as on the specified dates, the passbook should show an equal amount of credit balance as on that date and vice versa. However, the balances shown by the two independent records may not agree due to the following. The first reason is a check issued but not yet uh, presented for payment. I'll give you an example in order to understand this. Here, if I have a company and also I'm going to give a check to pay the supplier, and also that supplier uh, received that check, but it's kept there and not going to the bank to receive he or her payment. So that check, because it is not presented to the bank, will cause a different amount, because I will continue to have my money on my account at the bank, and also in my cash book, I will write in the credit side, I have give a check to the supplier for payments. So because that the supplier is not going to the bank to present that check, so we cause different balances for bank and the cash book. That is the first causes of different bank, different bank statements, and also uh, the cash book. So the second cause of that difference will be the check paid into bank but not yet collected by the bank. Here, when it comes for this second reason, the check is paid into the bank but not yet collected by the bank. Here, it means that uh, the bank is not collecting and is not collecting the amount of money the some creditors paid to me and some debtors paid to me. That will cause the difference because the bank may not credit it to my account. That is what we call an uncredited check. The some customer is paying me, but the bank is not crediting my account. That will cause another difference to my cash book. So that's why all things uh, they cause everything to be happen. When it comes for the third reason will be uh, that was about the bank statements. The another things will be the bank charges. The bank usually debits the account of the customer with an interest on bank overdraft, collection charges, incidental charges of various services rendered by the bank. So this adjustment is shown in the passbook, and when they occur, uh, and hence the balances in the passbook decrease. Customer comes to know about when they collect his passbook and verify it. Until then, the bank balances at per passbook will be less than the balance as per cash book. So when it comes for bank charges, what I want to explain to you, the bank charges, those are amount of money bank is going to pay to charge to their customer uh, because of an order you have provided to uh, to the bank. So because of opening the business account at the bank is going to charge you some fees. So that means that if you verify the passbook, suppose I have an account in some bank, and also that bank charges me like 1,000 per month. So if I don't check about that charges, I will continue to think that my money didn't decrease. So, and also I stay there. And also if I go to check for my bank account, I will get that my money was decreased by 1K. of because of that fees. So what we need as accountant is to verify for our accounts and also report that bank charges to the cash book in order to make the bank reconciliation to reconcile the all statements, bank statement and the cash book statement. Uh, let's continue for another reason for different. It is an interest credited by the bank but not yet entered in a cash book. When it comes for this point, here, this is an interest credited uh, by, by bank. That means that the bank is gonna to credit to you some amount of money for your account, and also because you don't know about what's happening for your account, you receive some an interest, and also uh, you because of the cash book uh, isn't updated, you require as an accountant to update that cash book in order to make the equal balances for bank and the cash book. Do you understand? Another reason would be the interest or dividend we are going to receive for our investment. Suppose you have bought shares in a bank. So because you buy shares in a bank, and also that bank is going to pay you a dividend for your shares. So you're gonna to receive a dividend for your account, and also in your cash book, you need also to update uh, that balances. So that's why always we need to verify the bank statements and the cash book also in order to confirm that everything's okay as an accountant. Uh, another another cause can be the amount directly deposited into the bank by customer. Here it means that there is some amount is going to be deposited for your bank account, and also you don't know where that money comes from. That is what we call a direct deposit. Do you understand? So because it is a direct deposit, you don't know where that money comes from. So you need to verify for your bank statements, and also you confirm that that amount comes from this customer, and also you update your cash book in order to be safe, and also you say that this is a collective balances we have. So that's why we need a balance reconciliation, bank reconciliation, day to day, monthly, and also you can it depends for the accounting period for the company. Let's proceed. When it comes for the cause, that is what we are still on. There is also a payment made by bank on behalf of uh, the client. Here, what these points want to mean. Here, the bank is going to pay you like an insurance. Is going to pay you an insurance like monthly. So because of you don't know what his bank is going to be to apply, that's why we found for your accounts the money was decreased due to for that reason. So that reason can cause a different amount for bank statements and also cash book. Do you understand, my friend? So all learners, please note this and also try to keep it in your mind. It is very easier when it comes for this course of bank reconciliation. Another reason would be the bills collected by the bank on behalf of customer. Here, the customer may authorize his banker to collect the amount against the certain bills of receivable from the acceptable uh, or draws as and when they becomes due. So here, what I want to give you as uh, a good reason and a good explanation. Here, what I want to mean is that the customers here bought your goods on credit. After bought goods on credit, there is something that's happening. Uh, that customer allowed to pay you after the month. So what comes for that, after that 3 months, the customer not paying you. So you are ordering some factories company to collect that debtor's debt. So, and also you will receive money from your bank account. So that's why it may cause a different. That's a different reason why the bank statement may also differ from the bank statement. So my friend, stay in touch. Remember to subscribe for Apatech TV. We shall meet for the next where I'll foresee about how to calculate. Also, we shall collect the different questions about the bank reconciliation. May God bless you. Remember to subscribe for Apatech TV.